We spoke to a host of bankers, both from the private and the public sector sphere. Take a listen to many of these voices. The chorus seems to be base rates, lending rates will come down. It's a matter of timing.
First of all, I think as inflation started coming down in India, it was very obvious that RBI would cut rates. You know, when we talked a week back or so, I'd mentioned that our expectation is about 100 basis points reduction in rates in the course of the calendar year. When it would start, whether it would start in January or February or March, timing is very difficult to sort of take a call on. But 100 basis points cut in rates in the course of the year is something one would have expected. And we've seen the first sign of that 100 basis that rate cut with this 25 basis points cut that has happened. I think banks will have to sit back, evaluate their cost of funds. I don't think banks would react immediately. It would take them a couple of days or a little more than a couple of days to sort of look at their asset liability position and then take a call on whether they want to do it, whether they cut rates by 25 basis points or by a slightly higher or slightly lower level.
The rate cut from the RBI side was much on the expected lines, but market had expected a much higher rate cut of 50 to 75 basis points. So a mere 25 basis point cut may have been a little disappointing for some of the players. But going forward, of course, RBI will definitely support the growth, seeing the sustainability of the lower inflationary trends. Having said that, from the bank's point of view, of course, the rate of lending will definitely come down. The question is the timing. When? The demand for deposit is still higher, and it will not be possible for the banks to pass on the immediate rate cut by 25 basis points because the credit cost is still high. The slippages are still continuing. So there will be definitely cutting the lending rates by the banks, but I think it will be gradual because we will have to maintain the neutrality of the margin for a few more quarters.
That you see, bank lending rate is always depending upon their cost of funds. For the last few days, if you really observe, banks are reducing their deposit interest rate. Yes. Regularly, they are coming down. Every bank has, in one slab or other, they have reduced their deposit interest rate. But there is a lag effect. The deposit interest rate gives an impact only for the future deposits, whereas a base rate cut will give for the all advances. So each bank has to look into their cost of funds and appropriately to take it. It's what I say. It is to be looked into when they have cut and what is the ultimate their cost of funds. If the cost of funds have come down, banks will certainly pass it on this benefit to the customers. Cost of funds comes down only if they reduce their deposit rate. And the deposit rate really impacted their cost of funds because, as you know, cost of funds for deposits, this deposit rate reduction is only for future deposits, not for my existing deposits. So only the accumulation I can get down, whereas in advances, all advances outstanding also will go down.
We'll have to wait and evaluate it in our ALCO as to what is exactly the impact of it, what is the sort of demand, which sector, and we'll try and see as to how it all turns out in the next 1 or 2 days. We are already among the lowest in the industry. And as I said, we need to look at the portfolios and see as to whether some portfolios could be adjusted in terms of. You see, in terms of repo rates, there are two things. The one is, of course, the market rates going down. There's a bit of a gain in the bond yields and all that. The other thing is when you are in a borrowing mode, the cost of borrowing, if it happens in the market, it goes down. Now, most of us, I think, are with the excess surplus liquidity. So the second point is really there. So more importantly, I think it's a signal that, as the governor himself says, that, when he starts to do this exercise, it will be based on clear data. And I hope this is a signal and direction for us to look at it and discuss in our ALCO.
I think Reserve Bank of India's this move has come at the right time. And usually fourth quarter is considered to be a good quarter for a business growth for the banking industry and the economy as a whole. And this 25% rate cut is not that important from the perspective of the quantum of rate cut. But definitely it is very important from the perspective of the direction of rate of interest going forward. And once Reserve Bank of India has given this direction, there is a consistency. In a sense, the rate of interest will not go up for the next 3 to 4 quarters, definitely, because Reserve Bank of India will not venture in changing its monetary stance, and therefore we can believe that for the next 3-4 quarters, definitely the rate of interest will not go up. Now, it will remain same or it will be reduced further. But that gives an indication of change in the monetary stance by the Reserve Bank of India. And so far as rate cut by the banking industry and more particularly for PNB is concerned, I think banks will definitely take a call on this, and going forward within a week or two, some of the banks will call their ALCOs and they will discuss the entire economic situation, and hopefully rate of interest are going to go down now. Base rates will be reduced, hopefully.
Some of the sectors which will benefit because of interest rates in the system coming down, assuming banks actually ease up as well on interest rates, are sectors like real estate, sectors like capital goods, sectors like autos, for example. We spoke to top companies, managements from these three sectors on what their assessment is, what this rate cut will actually mean. Is it just an indication and we'll have to wait a long time before actual rates in the system come down, or whether this will directly start to benefit all these sectors? Take a listen.
It's a very welcome move, and as I heard somebody say in the morning, it's a welcome surprise, because normally this is done at the time of the policy statement only. One thing is clear, the expectation of reduction has been around for a while now, both because of inflation in India and inflation expectation going forward, because of the oil prices expectation, which may even dip further below 50 as was expected, and they've already shown in the last few days that they can drop below 50. So the overall expectation of inflation is low, and this is the conditionality that the Reserve Bank governor had announced earlier for him to actually start lowering rates. So I hope this is a signal, and the further reduction will come a little bit later because it is necessary. The signal was important to demonstrate the direction in which the Reserve Bank is looking and their expectations, to give a nod to the entire economy that we can start expecting lower interest rates now. But it is at the same time equally important that the banks respond quickly to pass on to the industry a lower interest rate.
You're seeing a similar reaction from everyone, a great sense of relief, a bright sense of hope in the new year. And with the RBI governor being such an accomplished economist, it sends out signals to the economy and to the Indian citizens at large that we are on a path of economic recovery. And this is the first signal towards that. For the real estate, housing and construction sector, I think it's a very happy beginning to a new year. We've been experiencing some traction in commercial leasing, but this would give a confidence booster to the individual buyers for homes, which are the mainstay of the industry in India. So hopefully in the next quarter, once this consolidates and the trends are positive, I think in the second quarter of the next financial year, we should see a large amount of launches, a large amount of building activity, and therefore completion of projects which have been ongoing. Once this happens, you'll see a multiplier effect on various industries, whether it be cement, steel, glass, ceramics, wood substitutes, whatever goes into the building of an apartment. And therefore, a very, very good that hopefully we would be achieving 6 to 8% GDP growth in the coming year.
Very positive move by the RBI. Not so unexpected, because in any case we were expecting some correction in between before the policy is going to get announced, because all factors are pointing towards the rate cut regime to start. So it's a starting point of that. He has not touched the CRR. Certainly, repo reduction of 25 basis points is going to be giving the right signal to the banking system and to the market altogether that you guys get prepared if the system were to prevail the same way. Because oil prices are substantially lower, rupee has not become unstable despite various other factors in the globe and in the country. WPI is still under control, CPI is under control, credit offtake hasn't picked up beyond a level, banks are collecting money, so they have to reduce the repo rate and eventually the base rate also.